Hi guys, this is Andrew from Trading Mastery and welcome to today's trading tip. In this video, we're going to focus on the US dollar and I'm going to explain for you and help you understand why the US dollar is more than likely going to continue to appreciate over the course of the next 5 to 6 weeks and even into 2022. The US dollar is more than likely, in my view, going to continue to remain strong compared to currency crosses such as the euro against the US dollar and even the pound against the US dollar, which have all been trending down over the course of the last month or two. Now, really, the main reason why currencies fluctuate higher and lower, it all comes down to interest rate differentials. And the bottom line is which central bank is going to offer fixed income investors, they're looking for a fixed income return, which central bank is going to offer a higher rate of interest in 2022, later in 2022, and that is where the money flow is going to go. Now, when you look at what's going on in Europe, what's going on in Australia, New Zealand, the UK, and the US, the bottom line is the US Federal Reserve is more than likely going to raise interest rates before the Bank of England, the European Central Bank, the Reserve Bank of Australia, or the Reserve Bank of New Zealand. And that's specifically the reason why we continue to see more money coming for the US dollar and these base currencies, the Aussie, the euro, and the pound, continuing to go lower. Now, those of us in the equity market that own US shares, our US share position, the investments that we own, is actually going to appreciate in value as the Aussie dollar goes down because the actual companies we own, those US equities, are denominated in US dollars. So even if the share price doesn't go anywhere and the US dollar continues to strengthen, we will make a return on investment, even though we, of course, are looking for the share price to appreciate over time. Whilst the share price may not be going anywhere over a few weeks, if the Aussie dollar is going down and we've bought those shares and we live in Australia, for example, then we're going to benefit from that. That's just a spin-off benefit. It's not the specific reason why we would invest in US equities. But basically, when it all boils down to it, right now, there is huge amount of strength for the US dollar because US Treasury yields are rising. We're looking here at the US dollar against the Canadian dollar, trading at 126.50 at the moment. More than likely, that is going to continue to strengthen over the course of the next 6 to 9 months because the US Fed is likely going to raise rates before the Bank of Canada. So bottom line, if you're a currency investor or you're wanting to speculate in that market and looking to that market to help you with your decisions, if you're looking to take a short position on the US dollar, in my view, that's like trying to row a canoe upstream against a very, very strong current that is going in the opposite direction. You're much better off positioning your canoe with the current and going downstream along with it rather than trying to fight against it. But don't ever lose sight of the fact that it's not a set of charts that determine the value of a currency or any market in that matter. It's the underlying fundamentals and where big money flow is going to go. And big money flow is going to flow to the central bank with the highest expectation of interest rates. The reason why the Aussie dollar went to 110 against the US dollar back in 2011 is because interest rates in Australia were 4.75%. Interest rates in the United States were zero. And as interest rates in Australia went down, interest rates went up over the next 7 or 8 years. The reverse occurred. The Aussie dollar went from 110 down to 60 cents and the US dollar strengthened significantly. So this bearishness that you can see here, and I'll just widen out the chart, on the US dollar against the Canadian dollar, I would expect that long-term uptrend to continue to go higher in 2022 until such point as we see the Bank of Canada, or in the case of the Aussie dollar against the US dollar, the Reserve Bank of Australia, change its tune with respect to where it ultimately believes that it's going to put interest rates. If interest rates in Australia are going to go up faster than the US, then the Aussie dollar is going to rally. But right now, the Aussie dollar, in my opinion, is more than likely during the year 2022, more than likely to drift lower. And that is exactly also what is showing here from a technical perspective. We have broken any uptrends and we are down in a downtrend right now across the board in anything that is a base currency against the US dollar. So I hope that helps you appreciate what's going on from a currency perspective. If you'd like to learn more about how it may impact your equity portfolio, make sure you jump across to tradingmastery.com.au. You can get access to that 7-part mini course that will help you get started. Until next time, happy trading.